Real estate, investment, title insurance. Get ready because it's time to raise the stakes with real estate. Like with any other specialized area, real estate has its own specialized terms and definitions, which we need to understand in order to properly communicate within the field. We're going to be looking this time at title insurance. Noting that when we're looking at terms and definitions, we'll be referencing Investopedia, which is a place you can go to look at terms and definitions for investment-related items. Title insurance is going to be a key component with most real estate transactions, one which we need to understand what is happening and how it's going to be fitting in within the process. So title insurance can be defined as a form of indemnity insurance that protects lenders and home buyers from financial loss due to defects in a title to a property. So obviously, in general, we got a seller that's going to be selling to the buyer, the title then transferring from the seller to the buyer. What if, however, there's problems with the title, the claim to the title, then who's going to be responsible for that? And can we get some assurance or some coverage in the event that there is some kind of problem and the title insurance is going to fit in? This is where the title insurance in essence fits in. So the most common type of title insurance is the lender's title insurance. Lender's title insurance is something the borrower purchases to protect the lender. So the borrower, so we're talking typically the purchaser here that is going to be borrowing, and they're going to need this lender's title insurance in order to protect the lender, the person that's making the loan. The other type is the owner's title insurance. Owner's title insurance is often paid by the seller to protect the buyer's equity in the property. So notice, if you're the seller, we're saying you're the person that's basically saying, I have claim to this property, I'm selling it to you in order and for money. So there's basically, if you get the title insurance, you're basically saying, in good faith, I have the ownership. It's a way of assuring that you have the ownership. So typically it's going to be falling on the seller then. In other words, once again, owner's title insurance is often paid by the seller to protect the buyer's equity in the property. So indemnity insurance, just what is indemnity insurance? Notice up here we said that the title insurance is a form of indemnity insurance. So just indemnity insurance in general is a type of insurance policy where the insurance company guarantees compensation for losses or damages sustained by a policyholder. Indemnity insurance is designed to protect professionals and business owners when they are found to be at fault for a specific event like misjudgment. Certain professionals must carry indemnity insurance, for example, those involved in financial and legal services, like as financial advisors, insurance agents, accountants, mortgage brokers, and attorneys. So you may have some awareness with indemnity insurance in general. Medical malpractice and errors and omissions insurance are also examples of indemnity insurance. Okay, bad title. So we need to know what bad title is. In essence, this is one thing that the insurance possibly could be protecting against. So what is bad title? A legal document associated with an asset that does not grant ownership to the entity that holds the title. So there's going to be a problem with the transfer of the ownership when we have this issue of the bad title. They could be the result of legal issue, financial problems, or even simple clerical errors. They are almost always associated with real estate and can stop the title holder from selling the property. So obviously this could cause a problem within the transaction. When we're looking at the transaction between the sale of real estate, there's a lot of components that are going to be involved. And, a bad title is going to be a component that could, stop the process. So clear or perfect titles are necessary to legally transfer a piece of property. A title holder can clear up a title by resolving the legal, financial, or clerical issues. So if there is a bad title, question is, can you clear it up and then, continue on with the process? Title insurance. So title insurance protects lenders and buyers from financial loss due to defects in a title to a property. So if there's a problem with the title and the property, then as we go through the transfer process, that's what the title insurance can basically help with, to make sure that you have the actual claim, to the property. If there's any problem with it, then again, who's going to be liable for those kind of problems? So the most common claims filed against a title are back taxes, liens, and conflicting wills. So back taxes, liens, conflicting wills. The one-time fee paid for title insurance covers pricey administration fees for in-depth searches of title data to protect against claims for past occurrences. So in other words, if you didn't have the title insurance, then how would you really be sure that there aren't these kind of problems with relation to the transfer of the title? How would you know it was a clear transfer? Well, then you might have to pay for basically an in-depth search to double check, because you don't totally trust, of course, the person that's selling the property. You don't know them. So you'd have to basically pay someone to do an in-depth search. That would be a long, costly process. So the title insurance then is generally going to be the party that will be doing that kind of process and paying and basically earning in an insurance format for that process. So that's kind of where they fit in. So any real estate transaction needs to have a clear title to ensure the property is free from liens. So when the transfer happens, you want it to be clear. It has to be clear so that you know what exactly is going on with this kind of large transaction. So a title insurance policy will cover many risks like flawed records, incorrect ownership, and falsified documents. Clear title. So what is clear title? Remember, we need clear title in order to facilitate the transaction for the real estate transaction. A clear title is needed for any real estate transaction. Title companies must do a search on every title to check for claims or liens of any kind against them before they can issue. So you got to have a clear title so that there aren't any problems, so that you can go through the process. So one more time, the title companies must do a search on every title to check the claims or liens of any kind against them before they can be issued. So title search, an examination of public records to determine and confirm a property's legal ownership. So when you think about the actual title search, you want to think about, okay, who has ownership to this? Once again, it can be quite complex in some instances if there's some ambiguity in terms of the recording of the documentation and the public record that's going back. So hopefully you can look at the public record and it'd be a fairly clear type of process, so you can determine the chain of ownership going forward and then move from there. So once again, the title search, an examination of public records to determine and confirm a property's legal ownership. It helps check whether there are any claims on the property. Erroneous surveys and unresolved building code violations are two examples of blemishes that can make the title, quote, dirty title, end quote. Title insurance. Title insurance protects lenders as well as homebuyers against loss or damage that happen from liens, encumbrances, or defects in a property's title or actual ownership. Common claims filed against a title are back taxes, liens from mortgage loans, home equity lines of credit or HELOC, easements, and conflicting wills. Traditional insurance generally protects against future events, whereas the title insurance protects against claims from past occurrences. In other words, that's one of the differences between kind of a title insurance and a general insurance. If you pay for normal insurance like car insurance or something, you're paying against the possibility of a future problem happening. When you're looking at the title insurance, you're still kind of paying for something that could cause a future problem. The future arises in the problem happens in the future, but it's caused by some claim that was in the past, because generally it would be a claim before the transfer happened or something like that, which is kind of distinctive of the title insurance. So basic title insurance policy usually covers the following hazards: ownership by another party, incorrect signatures on document, forgery and fraud records, restrictive covenants, terms that reduce value or enjoyment like unrecorded easements, encumbrances or judgments against property like outstanding lawsuits and liens. So types of title insurance, then there are two types of title insurance. We need to kind of have an idea of both of them. There's the lender's title insurance and there's the owner's title insurance, including extended policies. Just about all lenders require the borrower, so the buyer that's going to have the loan, the borrower, to protect the lender's title insurance policy, which protects the lender to the event the seller was not legally able to transfer the title of ownership rights. A lender's policy only protects the lender against loss. An issued policy signifies the completion of a title search offering some assurance to the buyer. Because title searches are not infallible and the owner remains at risk of financial loss, there is a need for additional protection in the form of owner's title insurance policy. In other words, you're going to have the title search happening, but they're not infallible. They might not catch something, and if something happens at a later point in time, then the owner may then be responsible, and the title insurance might help in that situation. So you will typically then have the owner's title insurance. So owner's title insurance, which is generally purchased by the seller, so it's purchased generally by the seller here, to protect the buyer against defects in the title, is optional. So once again, on the owner's title insurance side of things, you're saying if the person that is selling it, the person that is selling is saying, I'm the one that's selling, and so possibly in a way to guarantee that it's a clear, title, they're the ones that are generally going to be paying for the owner's title insurance, which will help then the owner, once they have the property, against future claims that could happen basically against the property that might have gotten through, in essence, or not be picked up during the sales transaction with the title search. So purchasing title insurance, an escrow or closing agent initiates the insurance process at completion of the property purchase agreement. There are 4 major U.S. title insurance underwriters. That's the Fidelity National Financial, First American Title Insurance Company, Old Republic National Title Insurance Company, and Stewart Title Guarantee Company. There are also regional title insurance companies to choose from as well. Purchasing title insurance. The cost of owner's title insurance is dependent on the state you live in, the insurance provider you choose, and the purchase price of your home. A lender's policy and an owner's policy are often required together to guarantee everyone is protected. At closing, the parties will purchase title insurance for a one-time fee. The Real Estate Settlement Procedures Act, RESPA, prohibits sellers from requiring purchase from a specific title insurance carrier to protect abuse from happening. So risk of not having title insurance. So what if you don't got title insurance? What if you don't have it? No title insurance exposes transacting parties to significant risk if a title defect is present. So if there's a problem in the title, of course, then that will be more problematic if you don't have the title insurance. So for example, imagine a home buyer after closing finds out about unpaid property taxes from the prior owner. So now you own the property, there's unpaid property taxes against the property that you weren't aware of, and now basically you would generally, who's going to be responsible for that? So with no title insurance, the financial burden of this claim for back taxes falls solely with the buyer. They will have to either pay the outstanding property taxes or risk losing the home to the taxing entity. Risk of not having it, on the other hand, with title insurance, the coverage protects the buyer for as long as they own or have an interest in the property. In a similar way, the lender's title insurance covers banks and other mortgage lenders from unrecorded liens, unrecorded access rights, and other defects. In case of a borrower's default, if there are any issues with the property's title, a lender would be covered up to the amount of the mortgage.